Well, we're going to get started here then. I'd like to introduce our speaker today. We have Sydney Padnos, and she is the founder and managing partner of Illuminate Ventures, a California-based VC firm that invests exclusively in enterprise software startups. Illuminate's portfolio companies have gained numerous successful exits, including acquisitions by tech titans including Autodesk, Cloudera, New Relic, and Oracle, and IPOs for companies like Exactly. Cindy has helped to accelerate emerging technology companies for over 25 years, first a serial entrepreneur, and then as an advisor, investor, and board member. She serves on several private company boards and the business board of advisors for Carnegie Mellon's Tepper School, where she is also an advisor for the Swart Center. So Sydney, thank you for being here today, and I'm going to hand it over to you.
Awesome. My pleasure. It's great to be here. Well, I'm noticing that I'm sort of scrolling through the list. I see all sorts of interesting names, but not people. But I guess I'm going to focus on my deck anyway. But what I would like to do is, first of all, thanks for having me here today, Allison. I really appreciate it. I, as everyone probably knows, am a Tepper alumna and have been pretty active with the school really since, ever since I left in a whole variety of different roles. I think Tepper made a huge difference in my life, and I'm sure that Carnegie Mellon overall, not just Tepper, will for all of you as well. It's a great school with so many great programs, and so I'm excited about it. What I'm going to do today is I'm going to have the conversation broken into a couple of pieces. I'm going to talk a little bit about our firm, just to give you a visibility into why and how we care so much about the enterprise software world. I'm going to tell you a little bit about the kinds of sectors we were investing in pre-COVID, many of which we continue to invest in, but then how COVID, the pandemic, and the after effects of it are affecting the landscape overall. And third thing is then to step back and tell you a little bit, because I suspect that a few of you at least are aspiring entrepreneurs. I want to share a little bit about how COVID is actually impacting the venture capital investing space that we're a part of, and that you as entrepreneurs would obviously need to be addressing as well. The last thing I'm going to do is share just a couple of slides that are a preview of some, I think, pretty exciting stuff we've been doing with students at Tepper. It's the third of a series of white papers that I've worked on since 2010, believe it or not. So this is the third one with students, where we look at particularly diversity in the high-tech sector, focusing on gender differences and how male and female entrepreneurs, male and female investors, and male and female, in this case, MBA students, are impacted by their gender when it comes to entrepreneurship, or if they are. So we have some ongoing research around that you might be interested in. If you are, by the way, if you go to illuminate.com, that's our website /whitepaper, you'll find access to the prior two papers, and the third one will be released in about a month. So I also, just ground rules, I really like to take questions. I like to make things as interactive as we can. So rather than waiting to the end, if you have a question, either send it to Allison or just unmute and speak up. As far as I'm concerned, that is not interrupting. That's interaction. That's something I love. Okay? So we'll jump in. The okay is okay to myself, right? Because nobody's going to respond. Allison, you can always say, okay. Excuse me. So here's Illuminate. We are a small firm. We've been around for 10 years, which is hard even for me to believe. I founded the firm after a role as a serial entrepreneur myself, and then had moved into venture for about 4 years, actually, I guess closer to 6 years in total, as a venture partner with several firms, and then a full partner with a firm where I was able to build an investing track record. 100% of what I've invested in and what our firm invested in is in this B2B or enterprise software category. All of our investments are the first institutional round of investment, but frequently that tends to be a company that has gotten further along in some unique ways. They've bootstrapped, they've been through an accelerator, we've done several spin-outs. We've invested in companies where 20 people started there on the first day because it was a spin out from a large corporation, or a really phenomenal woman entrepreneur that we invested in 2 years ago who had already bootstrapped her company to over $1.5 million in recurring revenue, annualized recurring revenue. So really phenomenal success, a company called Content Stack. To do all of this, we leverage this really giant community of advisors that are all from that B2B enterprise software world as well. They include people like the head of software strategy at Goldman Sachs, the head of corporate strategy at IBM, the former CFO of Yahoo, Fortinet, Sybase, Informatica. I mean, an amazing, amazing group of people, and about a dozen people who were founders themselves of enterprise software startups that have had already achieved exits. And our minimum threshold, believe it or not, was a $100 million exit, and some of them have had billion-dollar exits, and some of them multiple times. So we're just unbelievably fortunate. We also have this incredible group of interns that we work with, and I'll show you a slide about our current ones later. And I see one of them might actually be on this call. Hello, Austin. We'll talk later. And we're just huge, huge advocates for diversity and entrepreneurship as well. We don't, as a firm, use gender or ethnicity as mandates or investing criteria, but we do a whole series of things. We go out of our way to ensure that we see a broader deal flow. And then I know for a fact that we're applying a somewhat different criteria, a set of criteria than many other firms do when we look at these investments. So as an example, that company I mentioned that had bootstrapped to over $1 million in recurring revenue, woman entrepreneur, Indian entrepreneur, co-founder, her husband, still an LLC, not a C corporation when we invested. That for many, many VCs would be like, even one of those might be a strikeout, which is remarkable still today. But many people apply sort of old styles and old techniques when they are evaluating opportunities differently from what we do. Jennifer, my partner, we've known each other. You see this dual logo here, Vivant. We worked together. That was a company I was the founder and CEO of. I had recruited her into head products there. And let's just say I choose well, because after that company was acquired, I then recruited her into Placeware, where I was interim CEO. And then from there, she went to DocuSign, Smartsheet, and Flowroot. So this is a woman who's had 2 IPOs and 3 M&A exits in less than 20 years. So pretty remarkable. This is just to give you some visibility into the kinds of companies we've been investing in. Exactly is a great example of the diversity. If you look here on the screen, this is Chris Cabrera, the founder and CEO, Latino founder. His co-founder over here, Satish Palvi, who is obviously an Indian entrepreneur, and Dustin Bukowski here on the edge, excuse me, the woman co-founder who headed products, Satish, and headed engineering. They took this company from the ground up to an IPO. That's them standing on the balcony of the New York Stock Exchange. I was on the trading floor below as they rang the bell, and I literally was crying. And it was about this team making something happen, because look at the diversity behind them and the rest of their team. It's just super exciting. It's amazing what can be done. I won't bother you with all of these other details, maybe I'll share this one. Another no-no for many investors, this is a team of co-founders, identical twin sisters, who founded a company called Allocadia up in Vancouver that's doing phenomenally well in the marketing automation space. Exactly as the leader in sales performance management, went public and then was acquired by Vista Private Equity for over $500 million. So how do we evaluate markets that we want to invest in? Our approach has its own set of flavors to it, but it always starts for us with what is our knowledge set and experience, because as seed investors, very early stage, we believe that we need to be investing in sectors where we can add value that goes beyond the capital, beyond the check that we write, and offer the entrepreneurs that we work with an opportunity to leverage our networks, and our own experiences of having been, founders and early executives multiple times over. So we don't invest in healthcare IT, even though it's a booming area right now. We don't invest in biopharma or in lots of other areas. No consumer internet, that's not us. But then on top of that, we overlay a set of different types of trends that we think are really important. We don't believe, for example, that it's all about technology. We believe that it's the intersection, if you will, of these various market trends that really creates exciting markets for us to be investing in. So that might include, for example, the market aspect of this, meaning we're targeting new types of customers, we're targeting new geographies, that sort of thing. It might be the business model itself. So for example, we invested 2 years ago in a company that leverages a revenue share with their customers rather than SaaS recurring revenue, rather than traditional subscription model, rather than a freemium model, which you might be familiar with, is sort of the way that Dropbox and others sell, get it for free and then upgrade. They do something entirely different. So we look for companies that leverage several of those trends in parallel, and of course, all within the B2B software world, as I was saying earlier. So historically, what that's meant is that this is just a sample of the kinds of sectors that we were investing in 2019. After having done that analysis, gotten tons of feedback from our own advisory group, this is where we were. And you can see that SaaS business applications, cloud and IT infrastructure, and by the way, we're still investing in many of these areas today, but what we've come to understand is that some are going to accelerate much more quickly than others. Some are going to recover out of the trough that virtually all of IT spending is more quickly than others as well. And you can see what their growth rates look like. They're pretty attractive markets. But then guess. Yes, please.
Hi, yeah, so I have a question. Could you go back a slide, please? So my question is, you mentioned a little bit about your advisory group. I guess that's sort of a new concept to me. Could you explain a little bit about what your advisory group is and how they help you?
Sure, happy to. So the advisory group came about actually as a result of an experience I had as a CEO, founder CEO myself. I had many years earlier built a group then they were my business advisors. But what I realized is I wanted a group that didn't just advise me as the founder CEO, but that was available to my whole team. So I had people like Mike Stonebreaker, who was literally the founder of SQL, who, he founded Ingress. He was the researcher, the PhD at Berkeley that created the whole category of database technology and the rest. He wasn't my personal advisor, even though he had founded companies. He really was the advisor to my VP of engineering. And so I had all of these people around me. I had people like, I had the good fortune to have Dave Coulter, who's a Carnegie Mellon grad as well, on the advisory council, so that frankly, at the point in time when the world was falling apart, because at that time it was the dot-com bust, right? You had the bubble and then the bust. I went to New York for a meeting and had lunch with Dave, and he just looked at me and said, "Cindy, sell the company now." And I was like, "Dave, are you crazy? I'm just about to do our third round of funding. We're only running at whatever it was, $6 or $8 million in recurring revenue. We've only got 50 people. We're going to hit the moon, right?" And he said, no, you don't understand. And there he was in New York, in the financial capital of the world, seeing very visibly what was coming and what was going to happen. I didn't see any of it. I had my head focused in one way. So the concept of these advisors is the value they bring you from bringing the outside in. Now, in our firm, they bring deal flow. They act as advisors to our portfolio companies. They sometimes become the first customers of our portfolio companies, the companies that they work for. They help us with due diligence on virtually every deal we do. We're reaching out to our advisory group. I just did it yesterday. We're looking at a company that does technology to help biopharma companies bring product to market faster. I don't know anything about biopharma, but I know about collaboration and bringing product to market quickly. So I went to one of our advisors who knows, she has this huge network of biopharma people, invests in life sciences and biopharma all the time, and she'll help us understand that other side of the equation. So hopefully that helps. It's a lot of detail, but it's this incredible secret weapon that we have, honestly.
No, that's really interesting. Thank you.
So moving forward, basically, if you think about what has changed at a kind of a macro level, we stepped back and said, okay, what's really different? And let's start with that. And let's understand, let's make sure we understand which of these changes is going to sustain and which of them might be short term. So you can see the big shift from before to after, meaning after COVID hit, after the pandemic, everyone was really aware of it. Some of the bigger important, I think, trends here, this professional coders to low code, no code. I love this. I love things that democratize anything. I loved SaaS because, and the whole public cloud concept, because it democratized entrepreneurship. It gave people the opportunity to build a company without having to raise $2 million the way that I did when I started my company. You had no option. If you wanted to build something, you had to buy the servers, you had to buy the database licenses, you had to actually pay to host it at Rackspace and or another hosting provider. At Rackspace was the big one. And today, all of that is gone. So similarly, as you see this transition to low code and no code environments, you're seeing an opportunity for many more people to influence the content and the quality of business applications. And I think that's super exciting. All of these things are pretty interesting. And I really love the whole RPA, the whole robotics process automation category as well, because what we've seen in recent years is, unfortunately, that AI hasn't played out nearly as quickly as people expected. The need for vast amounts of data, the training, the algorithms, the experiments that have been done all over the place have not actually resulted in a lot of great results. So I see a hand raised.
Yeah, so can you talk about, can you hear me?
Yes,
Yeah, so what do you mean by low code / no code? Can you maybe give some examples on which sectors you have seen this trend emerging, and where do you see most growth in that as well?
Well, I think I don't want to spend too much time on one example because we've got so many that we're going to go through. I would urge you, frankly, just go do a search in Wikipedia on low code or no code, and you're going to find a plethora of good information there. But the net of it is, there's the creation of it's the concept is the ability to create applications without coding. This concept goes so far back, it's a little disturbing to me. I have to laugh because I was in a software development tools company many years ago as doing partner marketing and other marketing for the company. And I remember back then we used to talk about this. We used to have the concept of being able to do either scripting or have visual software development, but low code and no code is for real. This isn't just someone's imagination any longer. And it really enables non-professional coders, meaning non-engineers, to create product. And of course, it takes an engineer to build the platform that allows others to then do that creation. But once they have embedded the intelligence and the ease of use, really, that's necessary for a business user rather than a coder, it really changes everything, which is, I think, pretty exciting. Okay, so what's happening? What's actually really happening right now is a little disconcerting if you're one of the people selling product into information technology buyers today. And that means IT buyers includes everything from the departmental buyer, who's the head of marketing automation services, to the data center manager to everyone in between. And what you'll see here is that all categories of IT spend, every single one of them, are forecast to decline this year and have already in the first half of the year as compared to 2019. However, the category that has actually declined the least, or the two, are enterprise software and communication services. And the communication services piece, if you dig in deeper, which I did and our team did, you'll find that there's about 6 pieces of that. The only one that's actually accelerating is, who can guess? Of course, it's all of the video communications, the video chat, what we're doing right now. All of the others are actually still slightly declining this year. Not as much as the other categories. Devices are the hardest hit. A lot of people can delay buying a new device until next year or further, and they are. So there's also impacts that are very different by industry that we need to understand as investors, because if we're going to look at this, and we have, for example, a company that we were looking at in the transportation sector, we have to understand that they are likely to be more impacted than some others. Retail, similarly, short-term impact. Manufacturing, because of supply chain disruption, short-term impact. But some of them, on the other hand, it's really a little bit less certain, and this is, Gartner's view of it. They did a very extensive survey of information technology buyers across their customer base. So these are larger enterprises, admittedly, not startups, not small companies, but where the vast majority of the dollars of IT spend are being spent. Okay, so this is another important way to look at the market. But then what you also want to understand, at least we wanted to understand, is where does it go from here? How fast do things rebound? Which sectors rebound the most quickly? And of course, for us, it was very important to understand that not only is software one of the ones that has a lesser downward trend in the short term, but it has a very nice upward trajectory that actually crosses, over virtually any other in terms of the strength, if you will, of the anticipated growth over the next few years. So that, for us as investors, is a really good thing to see. And for any of you who are thinking of doing a software startup, that should be a positive. The other aspect of this that we thought was really interesting was that we found quite a few different research and surveys that were done of people looking at their own environments, large corporations being asked, tell us about your organizational capability. Tell us where you believe that you've actually found a unique strength or a unique weakness within your organization. And this is just huge. If you look at that 56% number, that is like unbelievably high percentage that are saying, gosh, we think our own technology infrastructure, and these are the IT people themselves saying this, right, is an actual detriment to our organization today. That's really disturbing, and it means they're going to have to act very quickly to address it. But what I think was the upside for me as I looked at this, it was like, look at the strengths. Many of those are human strengths. They have the belief that they have the right teams, that they have the right skill sets, that they have the right way of thinking about business problems. And frankly, that gives me a ton of encouragement, because this technology infrastructure, that can be fixed. If you had to fix all of the people side of things, that is much harder, right? It takes a lot more time. So, and it's also good news for any of us who are investors in technology to see that obviously to fix this, they're going to have to spend money. I mentioned that virtually every area at the macro level was declining of those 5 that I listed on the other chart. But I wanted to point out one where almost nothing is declining, where all of it is on an upward trajectory. And that is in anything that is cloud-related offering. They outpace every other category. If you look at the growth rates, they're insanely high, even for some sectors that are pretty large already, like data integration tools and infrastructure as a service, giant. And that one is a really interesting one to me, because it's just very clear that as these organizations are limited in terms of their overall spend. They have to find more cost-efficient ways to do things. And leasing, if you want to think of it, or renting infrastructure from, Azure, from AWS, from all of the players, is a much more capital efficient way for them to be able to deliver those products and services to their audience than building yet another, giant data center themselves. So that's an interesting example, but so are some of these others in here. The axis, one axis is the 2020 growth, and the other is the future growth that over the next 5 years. And you can see that virtually all of them make it over the line. There are only a very few that are stuck to the left of the line, meaning negative growth in 2020, and none of them, well, I guess operating systems below the line over the longer term. Any questions? No. Okay, we'll keep going.
Actually, I had another question. If you go back 2 slides, you mentioned the 56% number on tech infrastructure. I was wondering about the incentive alignment for these companies. So if these companies aren't, let's say, very technological companies and are providing some other value, why would they want to go and spend money to bolster their tech infrastructure? How does that help their bottom line?
Well, so this survey, this specific one that I chose, is actually a survey of financial service industry executives. So think about them. They are so incredibly dependent on their information technology. But honestly, so is almost any company. If you look back at the top market cap companies of 10 years ago, there were perhaps 2 that were information technology companies. If you look at it today and you look at the top 5 or 6, 100% of them are. There isn't anyone on that list. And now we have people like Tencent who've made the list as well that didn't even exist 10 years ago, right? So every company today is dependent on that digital transformation to serve their own employees and their customers better. I honestly, I truly can't think of an industry where that wouldn't be true. This just happens to be one where it's even more true perhaps than many. Okay. So one of the things that we decided to do is to look at 5 different areas of impact initially: agility, work from home, customer engagement, and the whole omni-channel aspect of that, security and privacy, and supply chain. And I'm going to just take you through a few of these, not all of them, because I think we're going to run out of time. And I'd rather go, answer your questions than spend a lot of time on slides. So if you step back and say, what is agility? What is it that people care about there? Literally, as COVID hit, many organizations suddenly came to understand that they did not have the ability to respond to it. You would see situations where you had product arriving into the loading dock, but nowhere for it to go outbound. They couldn't respond quickly enough and say, don't deliver, that product to me anymore because I have no demand for it and I have nowhere to go with it. So the agility of these organizations is something that their ability to work from home, their ability to support everything online for their customers, not just for their own employees as well. You can't go in many cases early on, you simply couldn't go into any of stores that were physical stores other than a grocery, right? And so there were all of these things that suddenly came up that people became to understand they could not support. Additionally, what was super interesting is that there were staff shortages in certain functions and oversupply in others. So for example, you suddenly could not have any field sales representatives, feet on the street, people knocking on customers' doors to sell anything. And yet they needed lots and lots of customer support people. And they have similar skills. Yes, of course, they're different and you might compensate them differently, but companies had to learn how to repurpose skill sets super, super quickly. There were also issues where companies needed to launch online buying, curbside delivery, so many different functions. I'll give you one funny example that relates to my own family's business back in Michigan. They run a recycling company. It's 500 employees across 3 states and many different locations. And suddenly, many of the manufacturing companies weren't manufacturing, and so there was nothing to pick up. So their truck drivers didn't have things to do. But guess what? The groceries and all of the retailers had this huge surge of demand. You know, kids weren't eating lunch at school anymore. They needed more groceries to eat at home. There were so many different aspects of it that our family business actually set up an in-house staffing firm. They set up their own business in-house and said, we're going to repurpose our workers into the companies that need those skill sets so that we don't have to lay anyone off. And we're going to do it as long as it creates a good job for our employees and provides value to a third party. Now that's agile thinking, that's creative, but you had to create all of the infrastructure that went along with that practically instantly. So that is creating all sorts of new kinds of interesting opportunities in the cloud and SaaS world and supply chain, certainly around collaboration, and even more so, this is an area of where that whole RPA and hyper-automation opportunity exists, to apply AI, not to replace humans, but to assist them and bring them forward in terms of doing more creative things, more structured things can be done by these bots and back office kinds of tools that support them. So that's kind of one interesting area. Another that we looked at was this, of course, change for all of us. It didn't matter whether it was remote work or remote education. Initially 100%, and now still a very large portion of work, particularly white-collar work, is being done from remote locations, your home or elsewhere. And it created a whole new set of market opportunity around lifelong learning, around thinking about a borderless workforce, not just that they didn't have to be in an office setting, but they could be anywhere. They didn't need to be in the same city. They didn't need to be in the same country. And we've seen some really interesting, one funny impact of that, by the way, that no one thinks about until it happens, is that if your workers move to another state, you suddenly have employment laws that are different that apply. You suddenly have taxes that are different that apply. And the systems were never designed to take into account the fact that someone might be working a job that was in one geography, technically, but suddenly, switch to an entirely different geography. It also really broadened the opportunity to better understand who could, in fact, be employed, because there was suddenly a much broader set of potential candidates, a much broader pool of candidates to fulfill the jobs that were open. So super interesting there as well. One of the things that we've seen is that for some companies, it's created a huge increase in revenue. So if you look, for example, at what's happened with Zoom, in the first 2 months of COVID, their revenue increased by 170% in 2 months. And that increased in the next quarter by another 350%. And their market cap has followed, right? So it's been, for some companies, an extraordinary benefit, and for others, a detriment. Imagine you're a company that sells technology that's only used inside of large call center environments. Not so many people working there anymore. What do? You figure out a way to repurpose your technology for remote workers and create remote worker engagement. But all of that takes time. You might know Udemy is a leader in the training and education category. They're just super well known for their online courses. They reported a 425% increase in enrollments, again, in just the first 2 months of COVID. Those are things that are going to sustain, and they're super interesting to look at. So this, I thought, was an interesting set of data around this topic. And there are 2 different viewpoints here. One is research that was done by IDC, the other by Gartner. And they showed some really interesting nuances, I thought. That's why I put both of them here. But if you look at the top chart, you'll see that pre-COVID, less than 10% of the workforce worked out of the office even 25% of the time. Okay, that's what this chart is telling you. Then they looked at, asked the question of all of this same sample audience, so what is it today? And you can see obviously a very major shift there with a large portion, 25%, that is working away from the office more than 75% of the time. That's huge. That's just a giant shift. But you'll see a sort of a different trail being expected over time, that a very significant portion will go back to only working out of the office 25% of the time or less, and in fact, close to half of the workers. And so the assumption that everybody forever now is going to work from home is not one that a big portion of the world yet believes, of the workforce. So it'll be interesting to see. Gartner's view, a little bit different, but the numbers aren't that dissimilar, basically saying that 70% were never working remotely, which is very similar to the initial view from IDC, but their view is a little bit different, saying that about 50% of the workforce will always or sometimes be working, working remotely. It's a little bit different nuance there, but I thought this was interesting. The other thing that I think we all have to keep in mind is that COVID didn't create every one of these markets. There was a lot there in learning and learning experience platforms before COVID. But obviously what's happened is dramatic acceleration. If you go back to my comment about Zoom, Zoom's growth rate for Q1 of 2019 was 6%. 6. Their market cap had dropped by half. They weren't going anywhere fast. And COVID was the most unexpected, unbelievable enhancer to that company's prospects of anything you can imagine, right? And I think in their case, it is sustainable. So many people have now adopted and come to understand the value of the flexibility that this offers, that, it's an extraordinary opportunity. But what I am seeing, and what we're probably seeing, a new company a week practically that's approaching us with new ideas and new approaches to not just e-learning, but also to e-events, remote events, and how all of those will take place, and all of the other aspects that go along with this. And it's a super interesting time. It's going to be flooded, I think, with businesses starting here. And so as an investor, we have to spend a lot of time trying to sort the wheat from the chaff, if you will. So sharing the next category, unless there's any questions? Not now? Okay. This omni-channel experience and customer engagement area is one that's really near and dear to my heart. I love the whole concept of taking things omni-channel and of taking them actually even to an omni-experience level. And I'll explain in a minute what that means. But what I see in that category is a transition that means the products have to be API first. They have to be agnostic as to how content is deployed. They have to be developed in a way that they understand that we have different modes of communication today, not just different venues of communication. And all of that is creating, I think, a huge opportunity. What it does is it blends many areas together, and I think that makes it both exciting and challenging. If you think about what has happened, consumers have just completely adopted digital at an unprecedented growth in the volume of look at Amazon, look at any e-commerce company. We're investors in a company in Korea that is it's an unusual story where one of our portfolio companies merged with them 5 years ago. We don't normally invest outside of North America, but this company also gained over 50% growth in the first quarter of the year. And by the way, they were already a $9 billion top line revenue company. So that is just extraordinary growth path, extraordinary trajectory. unplanned, but they were ready for it. And in fact, I'm pretty proud that the guy who was VP of engineering of my startup, whose company later we invested in and merged with Coupang, that's the company in Korea, that he was the CTO of that company during that time, that prepared them to be able to take advantage of these things. It's really a once in a lifetime, probably several lifetimes opportunity, that if you're not prepared, it would be, lost because your competitor will be. So what is this omni experience concept? We used to live in a world of multi-channel, and think about Adobe CMS as kind of representing that category, right? Where, and WordPress and lots of other individual tools that were designed for one use case. I needed to design once for my smartwatch, separately for my Jumbotron at the stadium, separately again for something that was going to be displayed on my mobile phone, and yet again for the web. Along came companies like our company, Content Stack, who said, nope, can't do things that way anymore. You need to create once, deploy everywhere. And that's exactly what they've done, and they just outpace virtually anyone that's over in this multi-channel world. Well, the next world that's coming is this one, where it's not just about how content is deployed, but actually how we interact with it, and how we have the ability to use vision and voice and gestures. I was talking to a company in the industrial automation space last week, and they shared with me how their product works. And they are dealing with maintenance, service and maintenance people who have to climb those giant windmills in the wind farms, and they have 70-pound packs on their backs to go up there with all the tools and gear and equipment they have. They don't have any hands-free. They have to be safe, they have to be climbing, but they want to be able to record what they're seeing. And so they literally have gestures and voice that allows them to interact with a device that they're carrying in that 70-pound backpack to record all of the maintenance issues, to get feedback from perhaps someone more experienced about a problem, to actually record the sound that they're hearing that sounds odd on that wind turbine as it's happening, so that they can assess that, oh, is that a bearing that needs to be replaced, or what other, is it the motor, what's going on here? And it's this combination of multi-experience that's going to make for a truly valuable solution for that environment. I'm not going to spend a bunch of time on the next two, security and privacy, other than to say, if you look at what's going on because of COVID and all of the existing regulation and the attempt to comply with it, it's a huge undertaking for most companies. We have a company in our portfolio called PEX that has an analytics capability around video content that allows you to actually identify any content, any video content or audio content on the web using just a half-second GIF, half-second. They've indexed 98% of the global web. They use this for digital rights management. They use this for protecting against child pornography. They use this for helping user-generated content to gain actually the revenue associated that they should receive from that, from YouTube and other platforms. And they use it to ensure consumer privacy as well. So there's this combination of solutions that's going to be required to address these issues. And COVID has brought all of that to the forefront. COVID didn't create GDPR, it didn't create the California Privacy Act, it didn't create those things, but it's absolutely accelerated them. Network security is another amazing example. I mean, think about how important that is today. And data privacy, as all of your data is leaving the premises of the environment. There are many industries where they never used the public cloud before because of data privacy concerns, and that has had to change. given the current environment. I remember daughter of a friend of mine works in an industry where it's in the music industry where they're creating the trailers and for the music videos and all of the rest of that. And this is such secretive information and so sought after by hackers that they would never allow anyone ever to work from home. There was no way to log in, period. You had to go into the office. And it was all about, they figured this was the only way to truly lock it down. That had to change overnight. And those kinds of tools, just some of them didn't exist at the level that these industries need. So that's another really interesting area. And the last of these areas is supply chain. We already talked about a couple of examples here. You know, you have grocery stores without any toilet paper. Has anybody experienced that? You have situations where massive amounts of product are delivered to the wrong location because processing had to move to a different location. You have the inability to source product that you need for manufacturing because the location that normally would ship to you is shut down. My personal experience has to do with that beautiful dahlia back there in the little vase. I had ordered bulbs, rhizomes are called, from Europe. They come from a nursery in Holland. They were supposed to be delivered in March. They were delivered at the end of May. I planted these things thinking they may never come up. We may just be too late for this season. And now here we are, October, I'm finally getting flowers. So all of us have had this experience, and it's obviously much more serious for many. We have a company, again, I'll give an example from our portfolio, a company called BitOps, that's a sourcing and procurement AI-based automation platform. It's a collaboration platform. It helps people do the sourcing they need from new organizations if necessary, and it helps them do it very, very, very quickly and potentially remotely. They started receiving inbound calls from very large organizations from Europe before they ever heard from people here. They had chief procurement officers from Fortune 500 global, 1,000 companies calling a little startup. And I remember the CEO in March saying to me, Cindy, I'm up 24/7. I've got to be up to talk to our engineers in India at 10 o'clock at night. I've got to be up to talk to these chief procurement officers at 4 in the morning. I'm getting like 4 hours sleep a night. And I said, his name is Edmund. Edmund, I can think of bigger problems to have for a startup than to have too much demand. So it's pretty interesting. I'm going to push kind of quickly through these other charts. So that's it on how we're looking differently at the actual tech sectors that we're interested in. In terms of the impact on venture capital itself, you can see here, there's a pretty big shift going on in terms of what the overall numbers are going to look like. If you double this, we're actually going to end up coming down somewhat in terms of the overall, number of deals that are done in the U.S. in 2020. And that's not shocking, I don't think, to anyone. But you'll also notice a really substantial increase going on in that biopharma category, that if you doubled up on those numbers, you're going to see a nice increase there. So there are some categories that are increasing, IT hardware decreasing, and software staying close to on par, coming down just a little bit from where it was. And this is deal count. The numbers look really different when you look at the deal value and the very, very large amounts of money that are going into biopharma in that area, as you might imagine right now. If you look at the B2B tech sector, which of course is what we care about, what you'll see is that the deal value is actually going up somewhat, well, as compared to other sectors, and the deal count is definitely slightly down. So the tricky part about this, however, is that most of the money is going into later stage deals. Q1 and Q2 saw a very significant drop in seed stage. So the dollar value is actually likely to exceed, well, to hit a peak, to hit the highest number ever. while the count itself may be slightly down this year. At least that's what it looks like right now. And then you can see here, what concerns any new entrepreneur is that seed valuations, that first round of financing, that's priced after angels, after accelerators, has actually declined for the first time in 10 years. And whereas if you look over here at the top bullet, the light blue one, that is the later stage deals, and they are going up at an extraordinary level in terms of those valuations. That's frankly somewhat what you would call in the industry a flight to quality. It's also indicative of what's happening where there is nowhere else to put money that you're going to make money. Interest rates are so low, so depressed, and the stock market is so high priced that if you're an investor, an institutional investor or a family office or the like, you really have nowhere to go other than venture to try to get alpha, to try to get some increase in your returns. And that ends up then inflating prices at later stage because those types of investors don't do early stage venture at all. Okay, so kind of interesting. Okay, switching topics entirely, I want to just take you through a couple of slides about our internship program. You can see here, this is our 2019-2020 group. We have a new incoming crew right now. We're in the midst of doing our final interviews with students across the country. We always have interns from Carnegie Mellon. We also have, interestingly enough, law students at Stanford we work with. They turn out to be phenomenal researchers. We've also worked very closely with students at Wharton's West Coast campus in the past. And we're learning, of course, that interns can be anywhere. One of the nice things that we used to have about the local interns is they would come with us to meet entrepreneurs, but nobody's meeting entrepreneurs face-to-face these days. And yes, this guy over here happens to be my nephew, who's the smartest, cutest, nicest guy in the world. Excuse me. The last thing I want to share with you folks is just a sneak preview. And excuse me, let me get a glass here of water. We've had, excuse me, so much smoke around here over the last 2 weeks from the fires that are north of here that my voice has not been the same for some time. So we have, I think I mentioned early on, done research around gender diversity and other types of diversity for many years. We do this every year in collaboration, or every 2 years generally, in collaboration with the students at Tepper. Kara and Natalie have worked with me for a year now on pulling this together. We had a survey that went out to several thousand people. We had over 500 responses, so a phenomenally good response rate. And the folks at Poets and Quants, if you're in the MBA program, I'm sure you know of their website, were helpful to us with that as well. We're super proud that we're able to get a very diverse response to that, both in terms of gender, ethnicity, geographic background, and undergraduate degrees, all of the rest. This survey was focused on MBA students, but we used it to then compare that with prior research we had done around entrepreneurs, founders of startups, and VCs themselves. And I'm just going to share 2 slides from the current research, and this is, again, is going to be published next month, that we looked at. And the first was, why do you want to be an entrepreneur? What's your #1 motivation to be an entrepreneur? And we gave people 16 choices, I think it was, and a phenomenal percentage of them, both current entrepreneurs when we did our survey 2 years ago, and current MBA students in the most recent survey, had almost identical, kind of response to this. By far, the concept of, I want to bring my product to market. I have an idea, I have a passion for it, that's why I'm doing this, okay, was really at the top of the list. You see some of the other responses, they're reasonably smaller, like by a long shot. But so the next most likely response was creating a long-lasting company, running my own business. I thought that was interesting, that was much more a motivation for students than it was for entrepreneurs themselves. And by the way, the entrepreneurs tended to have anywhere from 5 to 10 years of work experience before, becoming a founder. But, that's a whole separate set of data. And then this concept a lot of people have that, entrepreneurs do this for giant financial gain. That's what it's all about. Turns out that is not really anywhere near the primary motivation for most entrepreneurs or for most students who have plans to be entrepreneurial. It is slightly higher. In fact, more so, it's 4 times as high if you want to do the metrics for the male entrepreneurs as the females, but still diminished in terms of overall interest in that being their number one priority versus all of these others. So kind of interesting. And then last slide here is really about the barriers. So you have motivations. What are the barriers? And again, we offered more than a dozen, I think again it was 15 or 16 different options. And we let people write in their own as well. And we said, which obstacles, pick the top ones, rank order them and tell us which are the highest barriers you believe to your potential for entrepreneurial success. And then we asked the VCs, you'll see there's now a male and female VC column added. We asked them, which do you believe are the biggest obstacles to entrepreneurs? Okay. And there was some really interesting, I think, juxtaposition of differences here. And by the way, the reason we have low here is that we only gave the students, we decided it was too much to ask them to rank order all 16 of them. We had a pretty long survey. We only asked them to rank order their top 5. And this having a unique idea didn't make it even into the top 5. Okay, it was way below that. So we couldn't give an exact number because of that. But look at the differences here. Male and female VCs believe that one of the hardest things is having a unique idea. Why? Because we see the same idea over and over and over again from lots of different really smart people. And so, interestingly enough, the students don't think that's all that hard. And let me tell you, it is. And even the founders didn't rank it super high, although female founders obviously quite a bit higher than males. And then the other one that I think is super interesting is the concern over financial security. Let's just say that VCs are clueless, okay? That's the reality. They're just clueless. They don't understand. I admit it, but I've been on your side as well if you're an entrepreneur in this group. They don't understand how the impact that can have on a founder, on a young student who might have student debt loans still to pay off, how that becomes a very big part of the mix of how and when they decide to be entrepreneurial. Interestingly enough, by the way, the one that also ranked high for male and female founders it wasn't in their top 5, but that was a little bit lower than that. I think it was like 8 out of 16, so the middle of the pack, was the ability to balance work and family. And that concern turned out to be way higher for men than women, which I found interesting when we did the prior survey as well. We've talked a lot about that internally on why we think that's true, and we have our own theories, but that's a whole nother set of research somebody ought to do. So that really wraps up what I wanted to share today, and I am happy to take any other questions, although I think we've come to the end of the hour. I managed to squeak even the last slide in. How's that?
That's awesome. Thank you so much, Cindy. Really appreciate it. I'm kind of curious, on the previous slide, what was number 1 for the male VCs?
Let's go back. Oh, yeah. What was number 1? It wasn't in this list. I don't remember, to be honest with you.
Got you. Would I be able to reach out to you to talk more about this? I'm very interested in it.
Sure. I will warn you that, my next 2 weeks is pretty insane, but you can always send email. And Allison will know how to put you in touch.
Sounds
Allison,
good.
is there anything else you want me to add, or are there any other questions you wanted to insert?
I don't have any questions on chat. Do we have any other questions, Al? Okay. If we don't have any other questions, then I'm going to end the session for all. And thank you again, Cindy, for leading this.
Most welcome. Take care, everybody. Have a good afternoon.